Cryptographic and financial markets need high-quality data. Providing high-quality data is one of the main goals of DIA. Today, I am joined by Michael Weber, founder and CEO of DIA. Michael, please can you give a brief introduction what you do?
Thanks a lot for having us. With DIA since 2018, we are developing a solution that radically changes the way data is sourced, cleaned, and also accessible. While traditional tools lock data in a black box or make it extremely expensive to access data sets like Bloomberg, we tackle financial data for digital assets as well as traditional assets with a radical open source approach, from the source of the data to the calculation to the data to enabling access to these data sets via oracles for more modern DeFi and digital assets focused world, as well as traditional regulated players. You can put it a bit in a nutshell. It's a Wikipedia approach to financial data, aiming to grant the same access that everybody has nowadays on the basis of this common shared database versus Encyclopedia Britannica's 15 years ago.
Okay, interesting. So what is would you say, the main value proposition of DIA? And who do you see as your main customers? How do they profit? How do they use the data and products that you provide?
Yeah, from my experience, I worked at Bloomberg Investment Banking in London, as well as other European cities. Data is the foundation for every commercial activity you take, from a personal loan you take as a mortgage to bond issuances on a government debt level. Now, all of this is based on data you can trust and where you can answer actually the basic question, how did you come up with this number? Ranging from interest rates to LIBOR reference rates to actually more complex calculations. So we have a broad user base as well as customer base from the traditional space that pays enormous amounts of money already to answer this question. How did you come up with one specific number to build financial instruments, from ETFs to options on top? But also obviously for the DeFi space, what we tackle also later in a sec, trustworthiness and transparency for data is crucial. And this is particularly what we tackle with DIA.
Okay, as you said, I think we should go into different kinds of data and the DeFi later on. But for now, I think we can agree that data is crucial for both the traditional and the new financial world. But not only that, if we look at what we had in the past or what we have today with traditional banks, there's really a high level of standardization. This is exactly what ITSA aims to provide as well, to bring more of these traditional players in. And so I would like to know, what's the main reason you joined the International Token Standardization Association?
So for us from the beginning, when we founded DIA, as you say, standardization, in particular for this vast, complex and non-standardized data for digital assets, in the beginning crypto assets in particular, is quite different than traditional financial data. Standardization is missing on a trading level with a lot of wash trading and manipulation going on, non-regulated exchanges playing actually with this volume, down to the identification of these different assets by no single unique identification like you have an ISIN in the traditional financial markets. So for us, our mission, consolidating, opening, and making financial data on the transactional layer accessible. A key component is also fundamental data. So what's the identification? What's the hashing mechanism? On which chain is a specific asset running? And in order for investors, for the DeFi space, but also traditional investment space, to actually pull assets under management into this digital assets, from Bitcoin to security token, you need to have the standardization. Even further, if you go really long-term into institutional adoption, for example, big asset manager, institutional players can only allocate their money into, to make an example, usage eligible funds, so very specific standardized factor sets that actually enable compliance. And ITSA with ETIN is, in our view, providing a core base layer actually for this adoption of digital assets in the compliance space, in the traditional space, but also for the DeFi space to actually act on these data sets. And also happy to actually see that ITSA is also pursuing this open source and access mission with ETIN, the token identification number actually integrated in our core financial data sets. So this path to standardization, to take, for example, a Bitcoin or security token data set and have a layer from financial data, trading, pricing level to fundamentals like the ISIN data set. This is exactly what we want to achieve, and where ITSA provides the perfect combination to our core mission.
Well, thank you, Michael. I guess, and with this really broad answer, you took away all the follow-up questions that I had. So let's jump right into data again. Data is not data. We've touched on some differences between the traditional financial world already and crypto assets. Can you give a brief example of what's different between those two worlds and why it needs services like yours?
I think the main difference is regulation, compliance, and standardization. In the traditional world, for example, for you to be able to buy an ETF, below this is a price calculation of the values that is regulated by so-called benchmark administrators, which are regulated by market supervisory bodies, all taking care actually of the process that the data you trust, rely, and invest upon is compliant, standardized, and also auditable. Now, this is vastly different when you look at digital assets, also cryptocurrencies as one prime example. You have no single market authority regulating these data sets. You have a distribution of pricing points that is much more vast, expanded, and not standardized when you compare it to, for example, transactional data of stocks, bonds, or even OTC derivatives, which also points to a much bigger attempt for gray markets as well as outliers that have to be cleaned out of the data sets to be able to really act on top of them. But in our view, what is even more crucial, the majority of data providers in this digital asset and cryptocurrency space doesn't really provide auditable and compliant feeds. So let's take CoinMarketCap as the most prominent example. They frequently change the sources they take after the acquisition of Binance. Suddenly rankings from the acquisition target change dramatically. And what I'm saying with this point is there is no clear actually supervisory authority over this market. But this being said, digital assets provide a unique opportunity for transparency because you have on-chain volumes, transactions, and an inherent transparency actually given by this digital asset layer where you can reconcile at least some of the trades and some of the volumes correlating to what was actually reported in the market. And with DIA, we take this inherent transparency that you can monitor on-chain with correlations that you actually also can take from off-chain data in order to bring auditability and transparency for this digital asset space so people can actually build on top of this, because not every application, trading value, a wallet provider should go through the pain of trying to build up their own pricing methodology, data sourcing tools, and big data warehouse managements. Neither should they pay the next data provider for API calls like Bloomberg, Thomson Reuters, but only on a smaller scale. So our mission is really to provide this new ecosystem for players who are smaller and who want to act on top of this data, from really small hedge funds with strategies acting on top of this data, to more traditional player, where we also monetize the solution via traditional SaaS integrations, so they can also build first asset under management tools for traditional clients into this digital asset space. So data is crucial, and trustworthy data where you can answer the question, how did you come up with this? It's in particular more crucial when you have much more outliers like in the digital asset space, in our view.
I absolutely agree, and I think it's really helpful that you showed that even in crypto or blockchain, there's different kinds of data. For example, CoinMarketCap, I would argue, mostly aggregates data from several exchanges, which is somewhat intransparent. Then we have on-chain data analytics providers that run full nodes, which I guess in comparison is very transparent and easy to check if it's true or is somewhat altered. And now you, I think everyone has seen it, and I think we have to talk about it. You not only focus on blockchain data, but more specifically on the DeFi space. And maybe you can give a little more detail, what exactly is DeFi and how do you help with your data there?
Yeah. So in the end, DeFi, in my view, is one of the most interesting and promising processes, taking out intermediaries in finance that I saw in decades in the financial system. No matter if you have an M&A transaction, debt issuance, or a certificate with some barriers on specific actually trading level, all of this are specific data points that act on a rule set within a security where people can invest on top. Now, decentralized finance in the end takes this rule set that acts on top of data and the investment opportunity and combines it in a smart contract. And this obviously helps to take out not only inefficiencies with data standardization, consolidation, intermediaries for settlement and clearing, but it also enables in the end one very brilliant developer and quant to develop a certificate yield generating like structure that you would normally need a regulated, probably special vehicle regulated in an exotic jurisdiction in order to manage all of this trading strategy. So it brings enormous efficiencies to traditional financial markets, but also levels the playing fields to access actually these financial markets dramatically. Our core is obviously the data provision within this, because every of the strategies needs a data set where you can audit in the end the source as well as the calculation on top of this. But the core of DeFi will probably really impact the primary issuance as well as secondary market processes, but also back and middle end processes for settlement, clearing, redemption of specific instruments. This is only kicking off really now in my view with compound, maker and yield generation on top of this, very focused on the crypto space. But this being said, in my view, this will not be limited to the crypto space, but more of a methodology where this DeFi method is also used for more traditional assets. In my view, really equities as well as bonds and commodities also coming into this decentralized finance space in the upcoming years. What is needed, obviously, also there a bit more is compliance and regulations, because some of this also acts outside of each and every regulatory framework that exists nowadays. This is also obviously something where standardization and compliance needs to pick up, and also definitely something we with standardization want to help with.
Okay, Michael, then thank you very much for these last words on DeFi. I have to agree, I really wanted to ask you, what's the difference between DeFi and tokenization? We said 2019 is going to be the year of STOs, tokenization, and now it feels like 2020, 2021 will be the years of DeFi. And I'm afraid that maybe some things could go wrong, but as you said, I also agree, standardization, getting things right, being compliant with law, these might be the most important steps to make sure that DeFi in the end can be really successful. And I'm really looking forward what's happening there, and especially, obviously, as well, what changes with you, what further services you can provide, and to see DIA grow, both at the company as well as a member. So, Michael, thank you very much for your time, and see you soon.
Stefan, thank you, and thanks for the good work you're doing with ITSA. Have a nice day. Ciao, ciao.